Good evening. This is Pearly reporting from Sky News. Today, we'll be discussing about the balance of payments and the exchange rate of Singapore and the European Union. Singapore's overall balance of payments moderated for the third consecutive quarter in the third quarter of 2013. The overall balance recorded a smaller surplus of 0.9 billion as compared to 5.4 billion in the preceding period. The goods balance registered a smaller surplus of 22 billion in the third quarter as imports grew faster than exports. By contrast, the services account registered a marginal shortfall of 10 billion as compared to the deficit position of 0.2 billion in the previous quarter. Receipts from services exports increased by 0.4 billion due to higher revenues from the exports of travel services, which more than compensated for a decline in financial services exports. Imports of services grew by 0.1 billion as a result of rising payments for transport and other business services. The primary income deficit increased by 0.4 billion to 1.7 billion, as income payments rose while receipts declined. The secondary income deficit increased by a relatively modest 0.1 billion to 2.5 billion. The current account surplus fell by 0.4 billion to 17 billion in the third quarter, as the decline in the services account deficit was insufficient to offset the reduced surplus in the goods account and the wider primary and secondary income deficits. Next, we'll be elaborating on other parts of the balance of payments and exchange rates. This is Sky News. We'll be right back.
Welcome back, this is Sky News. The deficit in the capital and financial account continued to grow in the third quarter to reach $17 billion, up from $14 billion in the previous quarter. This was due to the significant increase in net outflows of other investment, which was largely driven by a reduction in net inflows to the non-bank private sector. Concomitantly, gross inflows into the domestic banking sector experienced a sharp contraction, which was greater than the reduction in gross outflows from resident banks. In comparison, net inflows of direct investment rose by $1.2 billion as gross investment into Singapore increased by more than the rise in outward investment by residents. Meanwhile, net outflows of portfolio investment contracted further in the third quarter. This reflected a step up in foreign purchases of securities issued by banks in Singapore, despite a reduction in resident banks' net disposal of securities held abroad. The average rate of exchange for any particular year is the sum total of the end of month rate of the year divided by 12. The exchange rate of 1 Singapore dollar to euro in 2012 is 1.6095. An increasing exchange rate will cause capital inflows and a capital account surplus as foreigners would put in their funds. This will cause balance of payments to increase. Singapore's exchange rate of 1 Singapore dollars to euro dropped from 2009 to 2010 because of the global financial crisis. However, it increased slightly from 2010 to 2011 because economies were starting to improve after the financial crisis. This is Sheena. We'll be back soon.
Once again, we welcome you back. This is Teresa from Sky News. In July 2013, the adjusted current account of the euro area recorded a surplus of 16.9 billion. In the financial account, combined direct and portfolio investment recorded net outflows of 43 billion. This reflected surpluses for goods, services, and income, which were partly offset by a deficit for current transfers. The seasonally adjusted 12-month cumulated current account for the period ending in July 2013 recorded a surplus of 204 billion, compared with a surplus of 79.4 billion. The increase in surplus of the current account was due mainly to higher surpluses for goods and, albeit to a lesser extent, for income and services. In the financial account, combined direct and portfolio investment recorded net outflows of 43 billion in July 2013. As a result of net outflows for both portfolio investment and direct investment. The net outflows for direct investment resulted from net outflows in other capital. They were partly counterbalanced by net inflows in the capital and reinvested earnings. The net outflows for the portfolio investment were due to net outflows for both equity and debt instruments. The developments in debt instruments mainly reflected non-residents' net sales of Euro area bonds and notes, which were partly offset by non-residents' net purchases of Euro area money market instruments. The financial derivative recorded net inflows of 1 billion. Other investment recorded net inflows of 16 billion, reflecting net inflows for MFI and other sectors and for the general government, which were partly offset by net inflows for the Eurosystem. The Eurosystem stock of reserve assets increased by 25 billion in July 2013, from 564 billion in June 2013 to 589 billion. In the 12-month period up to July 2013, combined direct and portfolio investment reached cumulated net inflows of 15 billion, compared with net outflows of 18 billion in the 12-month period up to July 2012. This shift was a result of higher net inflows in portfolio investments, which were partly offset by high net outflows in direct investments.
Continuing from what Sebastian had said, I will now talk about two articles regarding the balance of payment of the European Union. Tourism receipts, the country's biggest foreign currency earner, rose 12.3% year-on-year to 2.36 billion euros in July. Central bank data showed on Wednesday, showing strength for a second consecutive month and boosting the outlook for a balanced current account down the road. As a result, the current account balance, a key measure of economic competitiveness, showed a surplus of 2.72 billion euros from 0.508 billion euros in the same month last year. The July reading was also helped by an inflow of 1.5 billion euros from the European Central Bank, the first tranche of profits on Greek government bonds from its so-called securities markets program. The latest inflows brought total tourism revenue in the first 7 months of the year to 5.68 billion euros, a 50.4% rise compared with the same period last year, when fears of a Greek Eurozone exit kept tourists away. The second article will be about the European Union current account surplus surges. The European Union generated a big quarterly increase in the surplus of its payments current account. Official data showed on Friday a positive sign amid signs of economic recovery. The 27-member European Union, the second biggest economic entity in the world after the United States, achieved a surplus of 35.9 billion euros in the second quarter of the year. That was about 6 times greater than the surplus of 5.9 billion euros 12 months earlier. The data from the Eurostat data agency showed the improvement in the balance of payments for goods was far greater, showing a surplus of 19.9 billion euros from a deficit of 10.6 billion euros. A deficit on transfers of income shrank sharply from a deficit of 9.1 billion euros to 5.7 billion euros. The local tourism industry is forecasting a 10% rise in tourism receipts for the full year to 11 billion euros, expecting more than 17 million visitors. Restaurant owners and tourism business have slashed prices and upgraded services to weather the crisis and lure more visitors. The number of Russian visitors, who usually spend more than Germans or Britons, has risen 34%, official figures for the January to May period have shown. This is Hui Qi. Thank you for tuning in to Sky News. Have a great day, everyone.